guys, this is Genesis First Capital and I bring to you good tidings. So guys, this is Euro USD charts and we're about to do a breakdown of the market in as much as the market has opened, but we can still do a quick analysis for the week, guys. So first off, this is Euro USD and we are on the weekly charts. Before I proceed, guys, I'd love us to click on the subscribe button, turn up post notifications so that you don't miss any newer videos whenever I post them, and also try to comment if you've gained anything. So let's go on. This is weekly charts on Euro USD. The weekly chart. I'm about to do a top-down analysis. So first off, let me remove the drawings. So now we're left with a naked chart, right? This is the weekly time frame. Now this is how I do my own analysis. Yeah. So the first thing I do, I go to the weekly time frame, and then I see the market clearly. So what is the first thing I am seeing? So we have a very good fair value gap at this point, right? So that is the first thing I can see now. We have a good fair value gap at that point. So now I think in our subsequent videos I'm going to tell us the difference between a fair value gap and imbalance, right? So we have a fair value gap at this place, and now we have I expect the market to drop onto this particular zone here. So that is where I expect the market to come. So the market is meant to fill in this fair value gap and get to this imbalance here. So that being said, it means the market is still bearish to me. The market is still very bearish to me. So this is the point at which we can look for reversals. So which means if you are trading, most likely going to sell into these points like this, boom, upside. So we can get something like this. So it means that if you want to buy, the buy is actually very risky, but if you want to sell, it is advisable to sell than to buy, because we are clearly in the bearish market. So now let's go to the daily time frame. Let's see what is happening. Now back to the daily time frame, we can see that we've marked our zone. Right? Now let's zoom out for more clarity. Okay, so we have something of an order block at this point. So we can fine-tune our entry to this point here, right? So here acts as a form of liquidity here. Yeah, we have a form of liquidity on that side. So the market most likely going to clear that point, right? So we have liquidity, we have our order block. Now what makes this order block valid is because it has broken this particular high, right? It broke this particular high. It also broke this particular high here, right? So it means this order block is active and very valid. And again, there is no mitigation. The market has not mitigated that order block before. The market never mitigated this place before you're going up. So which means this point of interest is actually very valid. So I'll be taking my buys from that place if I am to take a buy, right? So this point is a very valid order block that the market might take a reversal from. But also you have to be careful, because we have this bad guy at this point here too. We have this bad guy at this point, right? So the market might want to invalidate the first zone, so that it can actually push down to get to this bad boy, which is the second order block, right? So you have to be very careful, guys. You have to be very careful if you're taking the buy. I'm going to mark these two zones, so which means if I'm to take a buy, I'll be very careful because I have two other blocks, the first one and the second one. So um, if all right, guys, this is gold charts, and we're trying to look at the higher time frame, see if we can actually get something out of gold. So we are on the higher time frame, and then we are looking at marking our swing high and our swing low, right? And we've marked our swing high. Let's proceed to mark our swing low, and yes, we're marking out our swing low now, and then we can see that the market's still in a range. It hasn't swept any form of external liquidity on the swing high, but we can see that a fair value gap that was made almost at the swing low, and that is what made the market kept on pushing forward. So we can see that the market is pushing up, which is a bullish kind of market. So the market structure now is bullish to me. I see the market bullish, and a lot of people might want to take a sell, but the sell is more of a trap, or should I call it scalp. So it's either you're scalping and then you leave, or you focus on the buys. So since we've seen a potential equal highs at that level, we we can wait for the market to clear those highs. So those highs are potential liquidity in the market, and since we know where the market is headed to, we don't need to sell, right? Because we know that the market is going to sweep those liquidity. So that sell, market up now, might be a trap for traders, right? Because if you look at the market structure, you'd see that the market structure is bullish. All right, so in this case, I'm going to um, bring out a template. So that template is what I'm going to draw out for you to understand. But you see this particular cell, I'm not certain this cell is going to hold because the market is still bullish, right? So you have to understand market structure. Once you understand market structure, you're good to go. So drawing the templates for you guys to see how the market structure is behaving. So you know that the sell at that extreme is more like a trap. So you see that there's a range that the market is trying to build up momentum, and that high is where the market is targeting to clear out liquidity. So comparing the template and the charts, you see the similarity. Yeah, so it means that that sell is likely not going to hold, or should I call this sell a trap? So if you're looking out to sell from that place, you should be very careful. We see that the market is building up momentum to break every form of buy side liquidity. Yeah, so we have liquidities to be cleared, and that's what the market is headed to. The market is definitely going to do that. So as we can see now, we see that the market is still bullish, right? So we have to look for bullish entries, which means we have to look for more buys in the market. We have to look for more buys in the market. So guys, let me clear out these things so we'll see it very well. So I have to go to lower time frame. I have to go to lower time frames to see for potential break of structure, and probably an order block in which we can trade for, right? So we've spotted a particular order block, and there's something I used to tell my students. I used to tell them that whenever you see a wick in the market, or should I say whenever a candlestick produces a wick, that wick can be used as a potential order block, right? So we mark out the wick there. The wick could be used as the order block, but then it is too wide. Our stop loss is going to be too wide. So in that case, you have to go to lower time frames to see if you can get a lower entry up. We call it a refined entry. So once your entry is refined, it helps you to reduce your stop loss. So instead of you to use stop loss of about 150 pips, which is actually very high, you can reduce your stop loss to about probably 80 or 70 pips, which is reasonable considering the risk to reward. So now we've reduced our entry, should I say we've refined our entry to that point, and we can also spot liquidity that the market is going to is certainly going to clear before the potential buy kicks in. So personally, this is more like a sell to buy. The sell is more like a scalp. Then you buy long term because clearly the market structure is still very, very bullish at this point, and it doesn't make any sense if you're trying to um, sell in a bullish market. So we've had a potential break of structure there, and it makes sense if the market drops to that POI, and then we start to buy. And however, I'm not going to buy immediately. I'm not going to have to wait for the market to clear that liquidity there, right? So once the market clears the liquidity there, we can be able to look for buy entries, and that is just what I'm looking at. So we've seen our point of interest. It's about 80 something pips, right? So which is actually still okay considering the risk to reward. Then we can go to our higher time frame to look for our potential targets, right? So this is a daily time frame. Let's see our targets. Let's see how far we can go. So you see that it is very, very, very beautiful because those highs that I said stands as liquidity. The market is headed to that zone to clear off all those bad boys at that place. So the risk to reward is actually very, very immaculate, very, very nice. So you don't need to stress yourself. You don't need to stress yourself. And just target the eyes, right? So this is how my setup is looking like on gold. If this matches with your analysis, make sure you do your own research. Very, very important. Don't enter a trade blindly. This is just the way I see the market at the time of posting it. So guys, we still have we're still bullish here. So we're expecting a short sell retracement, and then we get a beautiful buy entry, right? All right, guys. So this is DXY. This is DXY. So what are we expecting on DXY? First off, I'd like to go to the daily time frame as usual. Let's see if we can get a more buyers on DXY. Let me see. Let me see. Let me see. Let me see. All right. So DXY has broken structure at this point. So we have a break of structure at DXY here, right? So since we've gotten a break of structure, let's mark our swing low. This is our swing low on DXY. This is our swing low on DXY. Yeah, this particular one. Yes. So we have our swing low on DXY. So until the market breaks this particular low, we might still be very, very bullish. We are still very, very bullish, right? So DXY has been very crazily bullish, right? DXY has been crazily bullish. So we just have to continue buying DXY, right? We just have to continue buying DXY, and potential parts or potential points of buys could be at this point also, which is our fair value gap, right? So this place is actually a very good one to buy. So we also have a break of structure, so which means that place is actually still good to buy from. So okay, break of structure, return to fair value gap, and then this is our liquidity, right? So we are good to go. this is where I'll be expecting the DXY to make a very good um, buy from. And also, if you go to the 4 hour time frame, you see that we have a lot of liquidity at this point here. So let's take this out. We have liquidity at this point in form of equal low. If you're my students, you know that I've thought about equal low, right? So this equal low, the market must come down to sweep that equal low, right? The market must come down to sweep that equal low. That's where you can buy from. And also to take so basically that's just my analysis on DXY, right? That's just my analysis on DXY. I expect the market to drop all down to this place because we've had a break of structure, right? After a break of structure, we need to see a corresponding retracement. After a break of structure, we need to see a corresponding retracement, something like maybe down here like this, and then boom, continue going up. So this is my projection on DXY. I'm still bullish, but I think we'll get a sell retracement. I'm still bullish, but we can get a sell retracement. So guys, that is it. Very, very good setup. So which means this we align with our EURUSD. Don't forget, we are expecting bearish retracement on DXY. So if you are expecting bearish retracement on DXY, it only makes sense if EURUSD starts to buy, right? It makes sense if EURUSD starts to buy. So the buy on EURUSD could be also a retracement, right? It could also be a retracement. So something like this. And don't forget, EURUSD and DXY has a very, very strong correlation. So it means that if EURUSD is selling, DXY will be buying. If EURUSD is buying, DXY will be selling. So in this case now, we are expecting a small push down before it starts buy. So this buy could be a retracement, maybe around this zone. It could be a retracement for EURUSD, right? So the buy could be a retracement, and also DXY, we are expecting a sell retracement. So you can see the correlations now. So if you want to buy on one, make sure you're selling on the other one to make it very easy for you, right? So it's that simple, guys. It's that simple. Very, very simple. Bearish retracement to buy, and then on EURUSD, we are expecting a bearish retracement to buy, right? So it means that if I start buying EURUSD, I should expect DXY to start selling, right? I should expect DXY to start selling. So that this sell is what I'm going to bank on. That's why I'm going to take the buy on EURUSD, right? So guys, we've done our analysis on DXY, we've done analysis on gold, and we've done analysis on EURUSD. So along the week, I'm going to give us an update or a review of what these analysis play out. So guys, don't forget, if you're coming in for the first time, you have to subscribe, like, and turn up post notification, so when I drop updates on newer videos, you'll be able to get alerted. So see you guys next week. Peace out. So guys, that's all for the week, and I wish us all profitability, and I hope that we can be able to make use of the charts analysis in our private or our personal trading. And don't forget, if you're new to the page, of course, you have to like, share, and comment, and also don't forget to turn on post notifications so you get alerted whenever we drop newer videos. So guys, peace off, see you next week.